So what awful earnings we got last night from Tattooed Chef and Beyond Meat. Well, we didn't even get earnings, but they were still awful from what we heard from Tattooed Chef last night. We're going to do a little bit of an update into Tattooed Chef. We're going to talk about Beyond Meat. There was a few things that were a little bit worrying from these companies last night, and we're going to go through it all today and give my thoughts and my initial reaction on this. And I just want to talk about this because obviously when you see a stock going down, it's a bit more like, oh, why is it going down? And also, oh, is that an opportunity to buy? Or there's just a little bit more panic with a stock going down rather than when a stock goes up. It'd be so much nicer and easier to be talking about Callaway Golf after their earnings or Hims after their earnings. But yeah, obviously I thought, I want to come out here and give my initial reaction on what I thought of Tattooed Chef and Beyond Meat and a little bit of an update with them stocks. So I think the best one to start off with is Tattooed Chef because we don't really have too much news about earnings because they didn't bring them out. But I'll give my initial thoughts on Tattooed Chef. So at the moment, Tattooed Chef is currently down 4%. It's currently going down to $16 as of today's open. Basically last night, with about 10 minutes to the actual conference call, Tattooed Chef came out. They said they're going to reschedule their third quarter earnings. The only thing that basically came out is the delay is a result of additional time required to finalise the company's financial statements, and the company will make a further announcement regarding the timing of the release and conference call as soon as possible. So my initial reactions is, for me, out of these two companies that did not really positive news last night, this is the worst one on the list. And anyone that tells you that this isn't a big deal, I think they need to be a bit of honest, need to look at themselves in the mirror and kind of reassess it. Really frustrated with Tattooed Chef. First of all, let's just talk about the rescheduling. If you are going to reschedule your earnings, you do not do it 10 minutes before you're about to do your conference call. By then, the earnings should have been already out. They should have brought the numbers out and then we should have gone to the conference call. They delayed it past their earnings time and then released it. We're a bit slow doing that. And then it was just right before the conference call. It's just absolutely terrible management. There's no way around it. That is shocking. It is not good enough. And for the stock to be only down 4% is beyond me. For me, that is a 10% plus drop. It is terrible management. If you are going to reschedule earnings, which I don't know why we're rescheduling earnings, but if we are going to do it, you do it a week before, even a couple of days before. You do not do it 10 minutes before your conference call. And then for the BS reason that we got into the press release, finalise financials. That is a load of rubbish. You do not realise 10 minutes before your conference call, we can't post these, they're not ready. That is absolutely bonkers. The quarter finished nearly 40 days ago. You have enough time to finalise the results there. It does not take you 40 days after the quarter finishes to finalise your results, and then you do not realise you are not ready 10 minutes before you're about to report and do your conference call. It's terrible management. There's no way around it. Anyone that tells you that it's okay and we don't want to get numbers wrong, is not good enough. It is not good enough. You would have checked all them numbers beforehand. You would have not realised 10 minutes before there's a mistake. You would have not gone 10 minutes before, that's not right. I mean, if that is true, you would come out and just be honest, going, we just noticed there's an error in our financial reporting. But they're saying they haven't finalised the financials. You've had long enough to do it, and if you haven't finalised it, you do not leave it. Tattooed Chef have chosen to report on this date. They've chose it, so for them not to be ready to report is absolutely bonkers. They basically said this is when we'll be ready, this is when we're going to report, and then they go out and not do it. It is terrible management team, and it is frustrating because we've gone off the back of the situation of Sam Galletti and his shares and that issue. Okay, fair enough, we'll go past that one. We go past the point of view that I said about the online site and the online site going down for 4 weeks. And then we have a terrible Q2, and then we're thinking, okay, this is the big one, Q3, we need to start going back in the positive direction here. We get to Q3 and 10 minutes before that they go, oh no, we're not going to do it today. It's terrible, it is terrible. And out of both of these companies, this is the one that I am massively frustrated with after that news. Massively frustrated with. It reeks of terrible management. It's simple as that. I'm not going to BS you or anything like that. More important to me than hyping up stocks, getting YouTube views, making YouTube money. It's not important to me. It's not important to me. I have made YouTube videos for 4 years without getting a single penny from them. I only do YouTube videos because I find them fun. My views on YouTube, my revenue from YouTube is not important to me. My most important thing is my investments. I have far more money in these investments than what I will make from YouTube more than likely ever. I am not bothered. I can come out on here and say that if I've invested into a company, I'm not going to go around the point and go, oh, it'll be okay. If I see one of my investments not doing well, I will call it out. I will say that is not good enough. Tattooed Chef, not good enough. It is not good enough. It is terrible. Me as an investor, me that's put my capital into your stock, into your company, this is not good enough. You are a public company. Someone has a role, and I think it's Stephanie at the moment, of making sure that this is correct. You are paid to do this, and you have not done your job. This is frustrating, and I didn't want to make a decision off Tattooed Chef and kind of go, okay, it's one bad quarter I'm going to sell, because you're a long-term investor, you don't invest for one quarter. But it was that kind of point of view of going, okay, Q3 has to be a bit better than Q2. We get to Q3 and then we disappoint. It is terrible. Where it comes to Tattooed Chef, personally for me, I'm not going to buy the dip at the moment. I cannot put my more capital into an investment where I look at the management team and go, you're not doing a good enough job. You can't do that. I want to go invest my capital into best places, and I want to invest into a company that's delivering. I look at Tattooed Chef and they've just made 2 or 3 mistakes in the last couple of months, and that's not good enough. So for me, I'm not selling. I'm still going to wait for Q3 and see what happens from there. But I am very disappointed in the company right now, and that's what I'm going to say on Tattooed Chef. Next up, Beyond Meat. So Beyond Meat, first of all, I just want to talk about a reaction. Obviously, we're going to talk about the share price in a second, but the big thing I'm seeing right now is people, and what you will have with this is people see that share price drop and they are emotional off a share price. Emotional investors, the investors that do not do well in the stock market. If you are emotional off a share price change, you're going to struggle. That's the first thing I say. A lot of people are looking at Beyond Meat and seeing that drop in Beyond Meat and go, oh, it's a terrible company, I'm fed up with it, I'm going to move away from it. That's what people do. If these earnings came out and the share price wasn't down 20%, it was flat, everyone would be like, oh, it's okay. But that share price causes people's reactions, not what's going on financially with the company. That's the first thing I'm going to say on that point of view. Next up, shorts. There's a lot of shorts in this company. Like this is massively shorted, and I can already see from a lot of reactions how big of a shorted stock it is. And that's a lot of things. There's a lot of people out here putting negativity towards Beyond Meat and calling Beyond Meat out and going, Beyond Meat's a terrible company after 1 quarter. That's something that I'm going to say as well. But let's get into what's going on with Beyond Meat. So first off, I want to just mention Q2. We've just had Q3, and I'll give my thoughts on that in a second. But Q2, let's not forget, Q2 was very, very impressive from Beyond Meat. We started moving in the right direction. We started to get our growth back. We were at the top of our range. We had really good revenue growth. We had food service absolutely smashing it and the recovery happening. So if we just pop back to 3 months ago, let's not forget, Beyond Meat was not a terrible company. Beyond Meat had a 2020 affected by CV losing its food service, losing half of its company. People will go, oh, that's a terrible company because of that reason. Realistically, it's lost half its company. People that just stare at a revenue number would go, that's terrible. But until you realise it's lost half its company, then you realise, okay, maybe it's not too bad. 2021 was supposed to be the year of Beyond Meat moving in the right direction. With Q2, we had it. We had the company moving in the right direction. We had the revenue of retail doing okay, and then we had the food service coming back, and it was really good. Q2 was impressive, really, really good earnings. So let's not forget, 3 months ago, everything looked positive with Beyond Meat. But now we get into Q3, and Q3 is where there's some of the negative stuff going on. So as you can see, we are down 18%. Now on the recent earnings, this is what happened. Their weak point here is the US. So these earnings are not terrible, but they are bad. Look at the US net revenues. We are down 13% here. Now retail, I can see that that's going to be a little bit in and out for a little bit. I'm not too fussed on the US retail at the moment. If this number here, I'm not worried about. The big number I'm worried about in this earnings was this, food service. The food service on the US last time round was huge amounts of growth. For some reason, we declined. And that's the not good enough number in this quarter. From an international point of view, international retail, 117% growth. Fantastic. We look at food service international, 142%. Really, really good numbers. And net revenues still grew in the right direction. This is not going in the wrong direction. Sure, we wanted this to be a lot higher. We wanted this to be 30 to 50%. But you would think that Beyond Meat have reported an earnings here where we're going backwards. We're not going backwards. The thing is, we're going sideways at the moment. We are not moving in the wrong direction. We're just not moving in the right direction, and that's the big thing. So the big thing here was the US. The US is not growing as much as what it should be. We'll see that management have put a few reasons out why they think it is. End of the day, it's not good enough on the US front. But to think this company is completely wiped off is absolutely wrong. The Q2 was impressive only 3 months ago. Even in this Q3, the international growth is fantastic. The problem is the US. The US growth needs to move back in the right direction for sure. And overall, it was bad earnings for Beyond Meat. It wasn't good enough. That US growth needs to be better. But at the point of view where it's like, oh, that's it, panic sell time, not for me. I look at it and think, okay, it should have been better. But overall, we still have some things moving in the right direction. And to give up after one quarter, after a pretty good Q2, not for me just yet. Obviously, I'm frustrated because I would have liked to see better numbers, but that's where we're at. The other thing why I think the stock is down so much is because of the outlook. Outlook in Q4 has given it a big range. The big range is also not showing that much growth as what we'd like. So that's the big thing, is that we have Q3 at the moment, which isn't great, and then we have Q4, which isn't great, and that's what's moved the share price down. Now, what management did come out and say is that we are kind of just preparing for Q4, so we don't have to come to the point of view and give preliminary earnings again, and we look idiots. That's what management have said. So I understand why they've come out with this guidance and the outlook overall. And I've got to say, at least management came out and gave us preliminary earnings, and the reason why we got preliminary earnings and we still went down is because of the fact that we had the outlook. I think if we had these earnings how they are, the share price would have probably been flat. I think that the reason why we are down so much is because we had guidance for a weak Q4, and we'll see what happens there. For me, I have to look at this one and go, okay, where we're going to be at Q3, where we're going to be at Q4, and where we're going to be at Q1. 2022 is really the big year for me on Beyond Meat. The reason why I'm going to judge that investment, particularly off 2022, is because that will be a full year with, you can't blame the CV Delta variant. You can't. As well as that, you have the big brand partnerships like hopefully McDonald's and Pepsi coming in. If Beyond Meat failed to deliver in 2022, that's when I'll probably look at this and go, this is an investment that's failed. At the moment, I am disappointed. It was a disappointing quarter. It was a quarter that wasn't good enough. However, it's only 3 months period, and once again I go off this reaction. Judging a company off one quarter, judging a company off the share price, that is a reaction and not as a view as a long-term investor. As a long-term investor, I look at this one and go, it is a bad quarter, it needs to be better. But to judge a company off one quarter, I'm not going to do. I need to see this over a couple of quarters, because only 1 quarter ago, I was looking at this and going, everything's moving in the right direction. I look at this one now and go, okay, that part of the business wasn't good enough this quarter, and I am disappointed. But I am not going to make a view of how the company is doing off this quarter. And in fact, it's not even just this quarter. It's one number that I wasn't happy with. It was the food service growth in the US. That is what I'm not happy with. That's the one thing that let me down. So that's the one thing that I'm looking at, and I need to see that improve in the right direction. Realistically, the company is still doing very well on the international front. And even if this company was to fail on the US side of it, which I don't think it will do, but from a international point of view, I still think it has so much potential, because you look at the numbers there and it's ramping up so well. So it's not me throwing in the towel at Beyond Meat. I am disappointed with the earnings. They should have been better, but I'm not going to react over this just yet. I still think this has potential in the next long term, especially 2022. That's a big year for this one. So for me right now, and the thing as well is like all this negativity is already priced into the stock now. So there's definitely no point walking away from this at these hot prices. So for me, I am disappointed. It needs to be better. It needs to get better, but it's not terrible. It's not terrible. It's not time to give up, in my opinion, just yet on this one. As it comes from, I guess a few people will say buying Beyond Meat. At the moment, I'm not buying Beyond Meat. The reason why I'm not buying Beyond Meat is if I had a quarter here where I saw an overreaction and numbers all moving in the right direction, I'd probably go buy it. But because I saw Beyond Meat and I saw the food service in the US that I'm not happy with, just doesn't give me as much confidence to go and buy that one. If you look at an investment that I buy, that I look at and go, okay, this is going down, like a DraftKings, for example. DraftKings just reported fantastic financials, and you look at the share price dropped off because of the Entain deal, and that's not happening now, and the share price is still down. You're like, okay, you've gone down because of that reason. Company's performing absolutely amazing. The deal's not going through now. That's a 30% drop, where that's an overreaction. Something like a Beyond Meat, I look at Beyond Meat and go, there is a reason for this drop. And because there is a reason for this drop, it's one of those that I don't want to jump in just yet. So for me, both stocks are not ones that I am buying on these dips. But however, I've got to say that this one I'm less frustrated with. I'm disappointed. The numbers weren't good enough, and they need to improve. With a Tattoo Chef, it has been quite a few mistakes in a row now, and at least we have management coming up on Beyond Meat and giving a bit of preliminary, saying what's going on here, and sure, it wasn't good enough. But with Tattoo Chef, it is basic mistakes, and that's the really frustrating with that one. That they need to improve massively. So overall, I'm not selling both of these. However, I'm not buying both of these, and both of them I want to see improvements from, especially this one. This is one I need to see really big improvements from. But hopefully, yeah, I just thought, I'd just give my opinions on what I think right now on it. And yeah, hope it was useful anyway. If it was, hit the like button, and I'll see you next video.